Welcome to another session of Business Startup Training. Today we'll be looking at cash flow and the COVID-19. This is presented by Accounting Lecturer. So by the end of this session, you'll have a better understanding of cash flow and how business will need to manage due to the COVID-19 outbreak. So our objectives are: what is cash flow? The components of cash flow, what will happen due to COVID-19, the impact on staff and the company, and then we'll conclude. Now let's first of all start by defining cash flow. Cash flow can be defined as the amount of cash or cash equivalent. Cash equivalent means checks, means transfer, credit card, etc., which the company receives or gives out by the way of payments to creditors, known as cash flow. Cash flow analysis is often used to analyze the liquid position of the company, and liquidity speaks to cash. When we talk about a company's liquid, means that they have a lot of cash, like say Google or Apple has a lot of cash. It gives a snapshot of the amount of cash coming into the business from where and the amount flowing out of the business. So that's what cash flow is. Now let's look at the components of cash flow. In terms of cash flow, the key components are: number one, inventory. That is critical. That's stock that is held on a shelf or in warehouses. And then we have what is called accounts receivables or debtors. These are customers that the business sold to in the past and is yet to receive money. Then we have what is called prepayments. Prepayments is where the business pays in advance to suppliers for services and may not necessarily get those services at the moment. And then we have cash in the bank, or that which is deposited in the bank, which you more likely would see on the bank statement. And then you have cash in hand, which is maybe in a chest or a cash box stored within the premises of the business. And then we would have what is called our current liabilities. These are suppliers that we need to pay. We call them accounts payable. That's the first one, which is normally suppliers that we owe and we need to pay them. And then we have accruals, which is bills that are due to be paid but we have not yet paid. So this is utility bills that came on board that has been uploaded on the accounting software but has not yet been paid. The difference between our current asset total and our current liability gives us our working capital or our net current asset. Working capital or net current asset looks at the cash flow situation within a business. If the difference between these two, current asset and current liability, is high, it means that the business has enough cash. If the difference between them is quite low, it means the business is suffering liquidity problems. The main idea is to actually have your current asset be at least twice your current liability so that you're able to survive. And we want to ensure, in terms of the business as well, that the cash flow, which is the cash element, the liquidity element of the cash flow is more pronounced, because that's where you pay staff. You pay staff from the bank, so you want that to be the highest so that you're able to settle your financial obligations. Now let's have a look at it in terms of a chart. So again, here we have the cash flow cycle, which is the business gets the inventory or stock from suppliers. It needs to sell the stock. Once it sells the stock, it then will be able to get the cash in the business via the bank. Sometimes it may sell, but it doesn't receive the cash immediately, and so that becomes what is called debtors or accounts receivable. And then once it's sold to the customer, as I said before, it will get the cash. And then we also have a situation, again, as mentioned before, where it sells, but it's yet to receive it. So the main cycle that would be affected due to COVID-19 is there'll be a problem with inventory. So we'll have stock going out of date due to the COVID-19 issue. We will also have payment issues whereby you're not able to pay your suppliers due to the COVID-19 issue, which means that there'll be a lag in the system. And then we also have you would also have a situation where so you're not able to sell the inventory, so the inventory stays on the shelf. The customers, you're not able to receive the money from them, and then you also have a situation where you've made prepayments but those services are not provided, and that is going to create, it's almost like a chain, and if there's a break in the chain, it causes a cycle not to work. And this COVID-19 issue is going to cause a break in the chain from the supplier side as well as the customer side, as well as the payments made in advance side, and some businesses actually pay their rent 12 months in advance, and they would have empty offices, so they're not actually generating any revenue from the rent paid, and that creates other problems as well. They also may have paid for services in the rent, like utilities, and therefore some of the offices, the lights would be off due to the fact that no one would be there, and therefore they will be overpaying for rent. So there's a lot of implications in terms of finance due to this. Now, what's going to be the impact on staff and the company? We will have, unfortunately, job losses due to this. We will also have businesses closing. We'll also have some sectors may die or will not survive. We'll also have pressure on the high streets, which means that some businesses will just no longer exist. The face of the high street, it has been coming under pressure over the last few years, and this is going to exacerbate the pressure. And so therefore, we may have businesses that will no longer exist on the high street. In the short run, we'll have cash flow challenges, which means within the next 12 months, this situation is not going to be going away very soon. So we're looking at the next 12 months to have, the challenges to still exist, as even with the government support, it's going to take a while to feed through the system. And in the long run, we might take up to 5 years to recover due to the implications of this situation. Okay, so so we've looked at what is cash flow. We've discussed it. We said cash flow is the money coming into the business and going out of the business, coming into the business via customers or loans, and also going out of the business via suppliers and the payments of those loans. So that's the main thing. And we've looked at the components of the cash flow. We said it's inventory. We said it's debtors or receivables. We said it is prepayments. We also said it's bank and cash. We want it to be more on the liquid side, which is bank and cash, so that you're able to pay your employees. And I think the government's focus is more on the liquid side, which is, providing the support to businesses to be able to pay employees. So that's it. And then we have what will happen due to COVID-19. So there will be a break in the chain of the cash flow cycle, which is going to cause problems, and therefore it's going to cause some businesses to go under, unfortunately. It will have an impact on staff. There'll be a change in the high street. Some sectors will go forever. This is just really going to change fundamentally how we operate as a business and as a country. I hope that this information allows you to get a better understanding of the whole cash flow issue that COVID-19 has caused or will be causing. I hope that you like it, share, and subscribe. Thank you.